Everybody suddenly became a crypto expert again. Bitcoin pushes near 82,000. Ton explodes. Meme coins are back. Zcash goes completely vertical. And now crypto Twitter is acting like we're already in the middle of a guaranteed bull run. That's dangerous. Because this is exactly how emotional traders behave before markets punish them. People don't buy during fear. They buy after green candles make them feel safe. And this week, the market started showing serious signs of greed again. Today, we are breaking down why Bitcoin near 82,000 is not as bullish as people think, why TON suddenly became one of the hottest narratives in crypto, why Memecoin mania is returning, and why ZEC just delivered one of the craziest moves of the year. Because right now, smart money and emotional retail traders are playing two completely different games. Let's start with Bitcoin, because the psychology here is very obvious. A few weeks ago, everybody was scared. People were calling for lower prices. Every red candle created panic. Now Bitcoin pushes toward 82,000, and suddenly everybody becomes ultra bullish again. Same market, different emotions. That's the problem with retail traders. They don't buy value. They buy emotional confirmation, and whales understand this perfectly. The best time to distribute positions is when retail traders finally feel confident again. Now, to be clear, I'm not saying the bull market is over. Bitcoin still looks strong on higher time frames, but emotionally, the market is starting to look overheated. People are opening aggressive longs after huge green candles. Everybody suddenly talks about 100,000 like it's guaranteed. Leverage is increasing. Confidence is rising too fast. That's usually where markets become dangerous, because the second people stop respecting risk, the market starts looking for liquidity. And if Bitcoin starts showing weakness here, a lot of these hyped altcoins are going to get destroyed very quickly. That's why this next week is extremely important. Now let's talk about TON, because TON became one of the strongest narratives in crypto this week. Huge move, huge attention. Everybody suddenly talking about Telegram ecosystems again. And honestly, TON actually has a strong story behind it. Telegram already has a massive user base. Crypto integration inside that ecosystem is a serious advantage. And smart money loves narratives connected to real adoption. That's why this move matters. But this is also where retail traders become emotional. The second people see a coin pump 20 or 30%, they stop thinking logically. Nobody asks, am I chasing the move? They just see green candles and panic buy because they're scared of missing out. And that's exactly how people become exit liquidity. Now, personally, I still think TON has one of the better narratives in crypto right now, but chasing massive green candles emotionally, that's how impatient traders get trapped every cycle. Now, here comes the biggest warning sign in the market: meme coins. Because whenever meme coins start dominating conversations again, greed is officially back. Dogecoin moves, Pepe trends, random garbage coins suddenly pump overnight, and everybody suddenly thinks they're a trading genius. No, this is emotional gambling. And look, meme coins can absolutely keep pumping. That's what makes them dangerous, because greed works until it suddenly doesn't. Most traders chasing these coins don't even have a strategy. They just follow hype and influencers screaming 100x. And smart money loves these moments, because emotional traders become predictable. They buy green candles, they use too much leverage, and they ignore risk completely. That's exactly how people get trapped near local tops. Now, let's talk about the craziest move of the week. Zcash, because this rally shocked a lot of people. Zcash absolutely exploded with massive momentum, huge breakout, huge volume, and a brutal short squeeze that caught traders completely off guard. This is what happens when the market is positioned the wrong way. On my X profile, I called the Zcash breakout in March. Today, we are sitting on a 160% increase. My target remains $698, which is the top of the channel. Follow me on X for more amazing signals like this. Too many people underestimated the move. Too many traders were comfortable shorting. And once liquidation started, the rally became violent. Technically, the chart looked extremely strong, but this is also where traders need discipline, because once charts go vertical, people stop thinking rationally. They see giant candles and suddenly believe the move can never stop. That's dangerous. Now, personally, I respect the strength of the Zcash move a lot. But chasing parabolic candles emotionally after a massive rally is one of the fastest ways to get punished in crypto, and every cycle, retail traders learn that lesson too late. So, here's Stan Chain's view going into next week. The market still has strength, but crypto traders are clearly becoming greedy again. People are chasing candles, ignoring risk, and acting like every pump is guaranteed to continue forever. That's when markets become dangerous. Bitcoin is reaching a critical psychological zone. TON is fueling FOMO. Memecoins are bringing emotional trading back. And ZEC just showed how violent these rallies can become when traders get trapped. So next week matters a lot, because we're about to find out whether this market still has real momentum or if smart money is already preparing the next trap. Stay sharp, and I'll see you in the next one.